Good morning, everyone, and welcome to today's market color session. My name is Abigail, and I'll be taking the first half of today's analysis. We had a very, very long break. Friday, Monday, we didn't have any session here, but finally back. Good morning, everyone. Also, to the new participants, I see a few names here that are new. Mr. Gomina Andrew, good morning. Wayne Ebi, Patrick Umagu, good morning, and welcome back. And to our old community, the likes of Omojo, Olushola, Oviezino, Larry, Daniel. Good morning, everyone. Good morning, welcome back. Please just verify or signify you're new by leaving an emoji in the chat box. Let us recognize you properly. For the rest of us, how was the break and how was trading still? Although the market was quite slow because of the holidays, but how was trading? How was the weekend? I hope we had enough time to spend with family and just rest from all the works that we have to do. Thank you. Good morning, Mr. Ogisno. Okay, so while the rest of us are still typing, okay. Yeah, I know. I figured as well. All right, then. So let's just get straight to business, shall we? Let's see what the market has in store for us today. So we're going to be starting today's analysis with a look on commodity currencies, and that includes analysis on AUD/USD, NZD/USD, and USD CAD. And then shortly after, we're going to have my colleague come on board to do his analysis on indices. For the sake of those of us that are new, we have different days for different analysis on different asset classes. So there are days you see analysis on the likes of GBP/USD, EUR/USD, and gold, also the yen basket, and everything. And then there are days you see analysis on indices and commodity currencies, right? So we try to ensure we state the analysis we're doing in the group chat so you also have an idea of asset classes that we'll be looking at per day. Okay, I see more comments. Hi, Win Ebi, good morning. Tamo, Mahan, and Rafan. I hope I pronounced that right. Good morning, and it's good to have you here as well. All right, so let's also look at AUD/USD from the weekly time frame. Let's take a quick look at AUD/USD just to determine our predominant trend. So from what we're seeing here on the weekly time frame, it's safe to say that the predominant trend major structure is still to the downside, but then we've now seen the minor structure gradually taking out this point. Gradually. So you can see that the body or the candlestick of this particular week has now traded way above, right? So we're seeing price gradually going to the upside. If you go down to the lower time frame like the daily, it is way clearer. Structure, minor structure is gradually taking out the major structures. What price has currently done can be said to be a sweep of liquidity because we had a range and a lot of stop losses that were hovering around this zone, but price has now traded above, right? Regardless, if we're paying attention to our most recent swing and marking that out, we now have something like this that we expect to happen on AUD/USD. So this will now be our point A all the way down to point B, expecting temporary retracement into what the ICT traders call the OTE, so that we can continue trading in line with most current trend, right? So we're looking at this now, and this is what price looks like it's going to be doing. It has taken out liquidity. We're going to be seeing retracement, using the Fibonacci retracement to calculate the possible area where it is going to retrace into somewhere between the 50% Fibonacci level, or it's going to trade all the way down to 61.8%. If you're also looking at price action, you can see that we have liquidity on this imbalance that was left when the market moved with so much force. So we're expecting price to trade somewhere in between these levels. So we now have about 2 points of interest that we're looking at. The first one is in between the 50 to 61.8% fib level. And then the second point of interest is right at this fair value gap, which also has confluence with a flip zone. So we had the previous resistance level that could act as future support for AUD/USD. So yes, we've now marked that out, expecting price to retrace or retreat into these zones, and then we're looking for buy opportunities. So on the 1 hour time frame, same thing we saw on the H4. Price is still pretty much doing the same thing. So we're still waiting for price to trade in here. Now, I know some of us might have the question, can we take the reversal since the gap between where price currently is and where it is most likely to trade into is quite wide? Is it advisable we take a reversal? So I always consider the reversal trades low probability setups because you're trading against the trend, right? So if you want to look for against the trend trades, those are their low probability. And of course, you'd have to cut down your risk. You'd have to cut down your risk per time. You'd have to cut down your risk per time, right? So we're looking at here. So when you see a confirmation, depending on how you enter, for those of us who are already students in the academy, we know how we're able to take advantage of reversal trades, right? So if we see confirmation to take reversals, we're going to be dividing our risk by 2, maybe 3, and giving it 1 or 2 shots back down into the zone. But if not, and we want to stick to our trend following trades, we're going to be waiting for AUD to reverse into somewhere around this zone, and then we'll continue with what the 4-hour structure is currently doing. So as a recap, on AUD structure on the weekly time frame has taken out this particular zone here. Structure has taken out this zone, right? So we're expecting price to then retrace a bit lower, come back into OTE, and then we're going to be buying. So where are we now looking to buy into? Because price does not just move based on vibes, so always target liquidity. So if price eventually returns into this zone, then you can see on the daily time frame that our most likely liquidity zone is somewhere around this resistance point. So it's possible that price is going to trade all the way in. It's very possible. So remember, you also have to put fundamentals into play or into your considerations. Sorry about that. Into considerations, because they also play a big role on how these technicals tend to move. So yes, temporal sell-offs of AUD into an OTE, and then we're going to continue to buy this asset class. So pretty similar to this, we're going to be looking at NZUSD, and these asset classes tend to move in similar ways majority of the time. And as you can see already on the weekly time frame, predominant structure seems to be on the downside, but our minor structure is gradually taking out certain level points, right? So compared to the AUD, this is very clear. Price took out this zone with so much momentum. It is very, very clear. So of course, price is not going to keep tanking to the upside without retracement. What goes up will surely come down on this chart. So yes, now that we've seen this, I'm going to go ahead and mark out certain liquidity points that I expect price to trade into before we now use our retracement tool. So we have a fair value gap, another one here, which basically now serves as an IOFED. I will expect price to eventually retrade into, most likely tap into that zone and then continue to buy. Then we also have this fair value gap right here. There's a fair value gap around this zone. There's a couple of fair value gaps because NZUSD bought with so much speed that it left so much imbalance behind. And of course, you know that price would always want to go back in time, tap even 50%, at least 50% of the gap that it left before it continues. So we have our POI1, POI2, and I'm going to go ahead and mark out POI3. But this POI3 is quite close. This is somewhere around like 38.2% Fibonacci level. So except NZUSD is moving with so much momentum, then you may just trade back in here and continue to buy. If not, if not, you should be looking at price trading back into the zone, and then we continue. So let's use the Fibonacci retracement tool to calculate the most likely area where it is very possible to trade into. So our second POI, which is what we marked out here, it's possible price trades all the way in here, right? And then continues to buy. And then our third POI, which happens to be somewhere between the 61.8% Fibonacci level, is also where we're looking at. But also pay attention that we have a flip zone here. There's a resistance point that could become future support somewhere around 38.2% Fibonacci level, regardless we're watching. When it comes to POIs, we don't just set pending orders at those POIs and then expect them to get triggered when price gets into those zones. No, we're marking them out saying that when price gets into those POIs, we want to see certain confirmations. And those confirmations can be seen on time frames like the 5 minutes or the 3 minutes. So we want to see confirmations on those time frames before we now start to look for entries. We're not just jumping in, right? So this just gives us an idea. So we can either set alerts for those of us that are very busy professionals, and then when price gets into those zones, we check our charts, or go about our day while the market does its thing. So yes, we've now marked that out, waiting for price to eventually return into that zone, and then we are going to buy NZUSD. However, on the lower time frames, there are specific price points that price could trade into without going all the way down below and before it continues to buy. So we have somewhere around this zone that it's looking like price may just trade into, stop there and continue to buy. It's very possible. So these are another points of interest I'm looking at. Another one is somewhere around this zone, right? So we had a break of structure, price broke structure from this point. The impulse leg, this is the impulse leg that the market left. And while it was doing that impulse leg, it left another block that price could trade back into to tap into. Same thing that we see here. We have a break of structure around this zone. And then the impulse leg also left another block that price we trade into, and then we continue to NZ USD. Okay. All right. Sorry for that interruption. Please always endeavor your microphones are turned up so as not to distract others in the class. So USD CAD, the final asset class I'm looking at before we jump into analysis on indices. Starting from the weekly time frame as well, predominant structure is still very much to the upside, right? So this is what I call predominant structure. It's still very much valid, and price, all of these movements is minor, right? Okay, so as long as this Fibonacci swing is still very much valid, price could retrace back into this zone and then continue to sell off. On the daily time frame, same thing. I'm going to go ahead and delete that Fibonacci tool so our chart does not look clustered. Yeah, so I'm looking at this now. This is now my most recent swing, and I'm going to go ahead and mark up. But I can't draw this out yet because I don't have a good enough pullback for me to be comfortable drawing out. So I'm going to keep waiting for price to retrace, right? So on the 4-hour time frame, where are the possible reversal points that I'm looking out for on USD CAD? The one that I have here is this fair value gap, somewhere around the zone that price will retrace into, and then we'll start to look for entries. Yeah, so we're looking at USD CAD. I'm looking for sell opportunities on this asset class, and price retraces into this zone, then we can start to look for sell opportunities of this asset class. So as a streamlined process, when I come to do analysis every morning, I like to look at technicals, which is what we just did. And then we can now take a quick look at Forex Factory, just so we have an idea of the different fundamental news releases that are coming out, and we are prepared so that no news release takes us off guard and makes us to take unnecessary losses. So today is the 22nd of April, and all of the news releases we have today are very low impact and medium impact, so they're nothing much. We're not expecting too much volatility on the chart. Same thing tomorrow, 23rd of April, we have one coming out on the euro, so you should be watching out for this news release if you trade euro correlated pairs, the likes of euro USD, euro CAD, etc, etc. Then we also have one coming out on pound. Now for the one that's going to affect other dollar correlated pairs, we have one coming out on USD, which is the flash manufacturing PMI and flash services PMI. This is high impact, right? But not really high impact. But yes, we're going to be watching out for this news release to see how it plays out on the chart. And on Thursday, unemployment claims on the dollar. So also keep your eye out for this. Personally, I do not like to trade actively on my trading account when the news release are expected to come out. I just take them on TradingView and watch them do its thing. I like to trade aftermath of news because I don't want to be caught in the middle of all the craziness that could happen. Right, so yes, we have two high impact news coming out on the dollar, one on Thursday and two of them tomorrow. So watch out for that. Right. Then a third platform we can also look out for is Forex Live. And this helps us to just understand these different fundamental news releases that come out. As you can see, technical analysis being explained on USD, JPY, Japan, Kedaran, Chief, all of that. So for the sake of those of us that are new, take note of platforms like Forex Live, take note of platforms like Forex Factory, and put them into your analysis as well, because they will greatly help. Okay, so without taking too much more of our time, I'm going to be stepping down shortly so my colleague can come on board and do his analysis. If this was helpful though, please leave an emoji in the chat box before we proceed to the second half of this session. Okay, Mr. Gumina, Andrew said this is really great. I appreciate this. We're glad you do, and we're so excited to have you on board, sir. Was this helpful? Can we proceed to the second half of today's analysis? All right. So once again, it's good to have everyone on board. Please do not go anywhere. We'll be back in less than 30 seconds to 1 minute to continue today's analysis session. Cheers. God bless. We will be back shortly. Tell your friends, share the link so that more people get to join in the second half of this session where we discuss more on technicals and also on fundamentals. God bless.
good morning, and welcome back again to the second part of this market color session. How are we doing? Hope we are good. And we had the first session, which was very value packed. My name is Demola Global, and now we're at the second part of the market color session where we discuss about the US equity market. The US equity, I mean the US 30, the US 100, that's the NASDAQ, and also S&P 500. For those joining us for the first time, welcome. Thank you for joining once again. And for those that are new, well, the first part actually has done a lot of justice to that. If you're completely a beginner and you want um, to start your trading journey properly in terms of you confused about what has happened in terms of the term my colleague has used other blog and fair value gap, you're confused about what they mean, you can just quickly head up to our YouTube channel, right? And then search for value flow trading, search for value flow trading on YouTube, and then go to the playlist, right? It's the simple things, value flow trading, and then go to our playlist. You see a free course there for beginner, absolutely for beginners. So that will give you an insight into what you should expect. This is our YouTube channel, and then just come to the playlist here. You're going to see free training, right, for beginners, free forex training, and also forex training for beginners. You can sit on these two playlists, and that will help you to unpack a lot of things in this market, right? That being said, we'll go straight into the charts this morning, looking at what the market is doing across the US 30, across US 100, and also NASDAQ, S&P 500. We've said strongly at the beginning of the year that this year is going to be an amazing year in terms of US equity because it's going to be strongly, pushed by fundamental. And by fundamental, I mean what the US president is saying, what the White House is saying. Currently, we have a global trade war that is going on between the United States and China. Anybody that's into finance or is interested about finance, this news is not strange to them, right? And this is because the both economy are looking to get their own best interest at heart. And what is happening? We see that the market is tanking, right? Especially the US equity, US 100, NASDAQ, and also S&P 500, right? They are tanking. They've been tanking all through from the month of February, right? We've been seeing that tank from the month of February, and it's fully materialized in March. And then even up until now, the market is still tanking. Why? Because of tariff, right? There have been a lot of tariff across board from the United States president, that's President Trump, to countries of the world. And they reciprocated, while some of them folded because it's a hard battle for you to, as a nation, to battle with the United States. But then we see countries like China who have also built their economic firewall, and they are not backing down. And that is currently causing the markets to shake, right? As you can see in this market this morning. Recently, we had an information from the Chinese government telling every country of the world that if for any reason you side with the United States to sideline China, we are going to come for you. That was his clear statement made by President Xi Jinping, right? That's from China. And we can see that the market is really reacting to that. Currently, what do we see in US 30? US 30 has been selling off. Like we mentioned since last week, we see a clear structure sell-off, right? Market has been selling off purely because of this tariff plan. Structurally, we are seeing a sell-off across board. We've seen this. Let me mark out structure, and we'll look at other factor again, right? April was supposed to be a month for the market to rally, right? From seasonality to, from COT data, it's supposed to rally. We're going to look at that very soon, right? For US 30 was supposed to rally across board, but then we are not seeing that because of what? Because of the tariff. Usually post-election cycle, we are supposed to see Dow Jones rally to the upside, but what we are seeing now is really terrible because of the current situation in the market. That's tariff. But then let's continue with what we have here. On US 30, let me mark out significant levels. On US 30, we have these levels being taken out, right? This was our last place that we consider the market very bullish. However, it has been violated. strongly, right? We have some levels we marked out last week, which the market has also come to, start taking trades from. Okay, so on the daily time frame, what do we see? We can see clearly that we are what? We are obviously what? Bearish to the downside, right? The bearish to the downside structure. If you look at lower highs and lower lows, you can agree with me that we are all what? Bearish. So what do we expect as we speak? We expect that what price continues this bearish movement to the downside, and this is predicated on the fact that the US economy and global war with China is still intact. If that remain unwavering, then we should see this market continuously selling to the downside, right? Because investors are also panicking because they can't invest in a stable economy, so they are looking for ways to carry their money to other safe haven assets, which we've also spoken about, right? For those that don't understand what I just said, whenever there's an economic tension in the market, investors take their money from rich assets into safe haven assets like gold, Swiss franc, and yen, depending on which safe haven asset is the best at that moment. And currently what we have, gold is the best, right? That's why you can see gold rallying to the upside. So that being said, we expect that the market continuously sell off to the downside. However, we are seeing a retest or a rejection, sorry, from this other block here, right? You're seeing a rejection from this other block here. Other block is the last bearish block before it moved to the upside, right? Either bear or bullish, right? But in this case, we have a bullish other block here. It's the last bearish candle before the bullish candle that broke momentum to the upside. So we have that actually retesting here from this market on the daily time frame. By the time we come to the 4-hour time frame, we begin to see, okay, that the market actually has given us we were excited about this push to the upside because this was a reaction or an indication that the market will start buying to the upside, right? And then we saw like mini moves to the upside. We're expecting like a break of structure around this zone. However, what happened again? The Chinese government released gave a press release that sent the market again to the downside, right? So we saw all of this to the downside again. So what are we expecting this morning? There are two possibilities I'm looking at, that the market actually turns into a bullish market once again from this other block. Why do I say so? Because from the seasonality to post-election cycle, right? So there's something called election cycle. That's pre-election, election year, post-election cycle, and midterm, right? 4 years. So pre-election, you usually see the market rally to the upside. Election year, you see that continuation of the rally to the upside. On the mid-year, you see US 30, NAS, and S&P 500 ranging, right? Throughout that year. Of course, you see some kind of bullish movement to the upside and downside, but then typically by the time you check from overview, you see that year the market actually range. And post-election cycle, you see that the market do what? Is sell off. So this is post-election year, right? That's 1 year after the election, and we are gradually seeing a sell-off. However, from April, we are supposed to see like a move to the upside. I'm trying to load my seasonality chart here so that we can get enough information about what is happening. But it seems the market is really not, this chart is really not responding at the moment. So we could have seen what I'm trying to say. April was supposed to be a rally to the upside, right? Post-election year. In the month of April, was supposed to see that rally into May. But then because of the global tension that is happening, we didn't get to see that. So what am I expecting? I want this area to be I want price to come into this area of other block, and then we should see like a push to the upside. Why am I saying so? Because even on the 4-hour time frame, liquidity has been built around this, right? We've seen price trying to push to the upside and with serious momentum, but then it has been rejected all around. So there's like a trend line liquidity that's been built around here. Let me delete this chart too. There's a trend line liquidity that has been built around this level here, right? But then we've not seen price break above it. Structurally on the daily time frame, you're supposed to be selling, right? But then from seasonality from COT data, currently as you speak, if you check your COT data, you see that investors, that's institution, commercials are doing what? They are buying the S&P 500 US 30. They are increasing their position on US 30. So that is indicative of the fact that very soon, very, very soon, most likely we are going to see that rally to the upside, right? However, also that is also tied to the fact that there's a compromise on the global trade war that is happening, right? But by the time we see a compromise happening, then we should expect that US 30, NAS 100, and S&P 500 would rally to the upside, right? On the 1 hour time frame, what are we looking at on the 1 hour time frame? Now looking at trades that we can take on intraday basis. On the 1 hour time frame, we are seeing that there's an order block here that's not been tested before. Below it is the fair value gap, and price is beginning to come back into this zone, come back into this zone, right? We've seen a test of the fair value gap, and price is reacting up from that fair value gap, 50% of the fair value gap to the downside again. It's a good bearish market to sell off. However, I would have loved that price actually sold from the other block. So I'll be looking at placing a pending order here, monitoring what the market is going to do, right? Selling up from this other block back into this zone, right? Back into this zone, because on the 1 hour time frame, we have another block also that's not been tested. That's a bullish order block that's not been tested, right? This can be violated again. By the time we have a news coming out from either China or US, it can send this market to the downside, or it can actually also send the market to the upside, right? Vice versa, right? Because this market now is purely driven by fundamentals. So what am I waiting for? I'll be waiting for price to come again into these levels, probably test this order block that we have here. That's my first point of interest this year, right? This is my first point. Second point of interest, area of interest actually, is this zone entirely, because we have a gap that's not been filled, right? We have this gap that has not been filled, and already from price action that every inefficiency in the market, that the market price is going to find its way back into that level and then fill it up. So if that is correct, then we expect that this level will not even hold, and then we see a sell-off from this level. Once price tap into this level, and then we see that price will start selling up to the downside. And also we have like a box pattern here. By the time I go to 15-minute time frame, you see it clearly that there's a box pattern around the zone, right? It shifts to the upside, it breaks to the downside, and then price leaving this inefficiency. We have also a fair value gap also that can be tested. So those are areas that looks very valid from the chart, right? So, but then the first thing we want to consider, the first entry into this market, so that we don't miss the entire move, is this other block here. Price coming back into this other block, and then we selling off in continuation into this level, 37,781 spots, 65 levels. Those are places I would look to take my TP, right? I'll put my take profit around this zone, because I don't know, market can actually bounce off from this other block. That's not been tested before. Price just came around it, and then we saw a rally to the upside. So coming back again, you can see that actual bounce off that will send the market into a bullish move. That being said, let's look at our US 100, that's the NASDAQ, right? What is happening with NASDAQ? All of them have almost the same price action, because they are equally affected across board during this period. Just have a mini difference in their price action, but then they have almost 99 or 90% correlation, right? Currently, as we speak. So also price is rejecting off from this other block on the daily time frame. If you check very well on the daily time frame, we are also very, very much very bearish, right, in this market. So by the time we look at the market on the 4-hour time perspective, we see something that also that this market tried to reject off this breaker block here, but then we failed to gather that momentum, and then we are seeing a sell-off again to the downside, right? We are seeing a sell-off again to the downside, and price is currently at inside this fair value gap region, right? Still trying to push to the upside. I really don't know if we would see that momentum this morning, but by 2:30 we should see clear momentum entering this market, because as at that time, that is when New York market will be opening up, right? So we should expect that the real rally will not happen this morning. It should happen by 2:30, right? Because by then we'll see the New York market, the New York stock market open. That being said, on the 1-hour time frame, unlike the US 30 that we saw, setup for this is really not clear on the 1-hour time frame in terms of having valid area of interest, right? Point of interest is not clear right? What is looking like point of interest now is very far above, right? Which is this box pattern here. And this also serving as liquidity, right? There's a box pattern here, and this also is serving as liquidity, but it's not really clear as the one we saw on US 30. So sometimes you might want to just, analyze all of them and then pick one to trade, or pick the two that are have the clearest setup, the A plus kind of setup, then use the last one to monitor what is happening, right? In terms of correlation, since as we speak, they currently all move together, right? They all move in the same direction. If I can use that. So this is looking like a setup that we want to take, but then because of the price action currently, we might just want to pause on that. It's not really clear as the one we saw on US 30, but then it's still the same analysis. We're expecting that price sells off, provided the US and China war continue, economic war, right? That's trade war. It continues. Also, finally, we look at the S&P 500 quickly and see what S&P 500 is doing. S&P 500 has almost the same analysis with US 100, that's the NASDAQ, right? However, also like the NASDAQ too, the price action is really not clear, right? So for today, we'll be looking at only US 30 in terms of actually taking trades, while we use S&P 500 and US 100 to just guide us, right? Because they are all intercorrelated, right? They are correlated. Whatever is happening on US 30, you expect it to happen also on S&P 500. You expect it to happen also on the NASDAQ. So if you see anything happening on NASDAQ that is there to happen on S&P 500, we can quickly, position for the move on S&P 500, because we know that clearly it has happened on US 30, it has happened on NASDAQ. It will surely move across the board, although sometimes it can take a while, but then it will surely move, right? It will surely move. That's the way they are wired together, right? Or they are correlated together. So on the daily time frame also, we have S&P 500 reacting from another block, right? Also very, very bearish, technically speaking, right? Technically speaking, also with the fundamentals we have, it is very bearish, right? One of the things that also sent this market down to the downside this week was the announcement from the comment Trump made on the Fed, chairman of Federal Reserve, that's Powell, right? So that was really, really sensitive, because the Fed is an independent institution. So him coming after the chairman, it's very, very scary for investors, coupled with the fact that they still have tariff issues to battle with. They have that one, they are panicking on that already. You're now also coming for an independent, institution trying to, change, or should I say, fire. Yes, that's the word he used. Fire their chairman. So that also could send the market to the downside until we begin to see a clear evidence that clear compromise from China and also internally, right? Having a consensus, because the president is fighting for a lower interest rate, right? To boost, corporate America and the rest. Borrowing of money will be cheaper, and people can actually, borrow loans to inject into their businesses. Those that borrowed loans at high interest rates, by the time you bring the interest rate down, they'll be paying lesser amount of, interest back. So it's good for corporate America, but also it's the issue with it is the inflation it causes on the other side of things, right? So that being said, you can always read up on this news from FX Live, and go on what's it called, X, that's formerly known as Twitter. Follow President Trump and US secretary and all of those prominent political figure in the White House, because their announcement actually moved this market, especially for the US market, right? S&P 500, US 30, and what, NASDAQ, right? You see that their commentary actually moves this market. So if you're going to stay on this type of market, you want to ensure that you are in tune, right? Very in tune with what is going on. All right, on S&P 500, like we mentioned, daily time frame is also bullish, reacting up from another block. By the time we go to the 4-hour time frame, right? By the time we go to the 4-hour time frame, it's giving us, unlike, by the time we go to the 4-hour time frame, we see that it's reacting up from what? The fair value gap we've mentioned before. Quickly, let me go to the 1-hour time frame and then show something. We have like a pattern here, which is the box pattern, right? Although not very muscular, but then by the time we streamline it better, we'll see that it's a bit clear, right? We've seen the price swept this former liquidity, went to the upside, came back, tested it, and then went up again. So we can categorically say that price coming up to this other block, we should see a push to the upside. We should see a push to the upside. All of these technical analysis are actually based on pure technicals, right? Pattern recognition and what has happened before happening again. So we see another block here that has not been tested before. This area will serve as liquidity, right? This entire move that's happened will serve as liquidity, and then we have another trend line liquidity above here, right? So price tapping into this and then sending price to the upside. That's the pure technical, analysis that we have, right? Price coming up from this zone and then sending everything to the upside. Because of what? Because we have another kind of trend line liquidity here, right? However, what can violate this setup that we have? News from the White House, news from China, from Chinese government, and just news from Trump can violate everything, not because their technical analysis is wrong, but because of the new information we have. That is the main challenge we've been having since last week, right? News popping up, changing the entire direction of the market, either bullish or bearish. All right, so that being said, we're coming to the end of the analysis. Let me know in the comment section. It's a good time to ask a question. Do we have any question? Usually we also meet again by 2 for continuation of the analysis. If for any reason anything has changed in this market significantly, we look at it again and then we analyze our position. Do we have any question? Do we have any question whatsoever? And also let me know if you found this analysis helpful. Let me know so that we can wrap it up. Waiting for a commentary. Okay, Mr. Vizino, say no, all clear. Thank you. Let me see, analysis was helpful. Thank you so much. Thank you once again for those that are just coming in, right? Like my colleague has rightly mentioned, we have different days for different pairs. By tomorrow, we'll be looking at US the DXY, right? Japanese basket, that's JPY basket. Looking at yen, we're looking at GBP USD, Euro USD, and the likes. Also gold by tomorrow, right? So for today, every Tuesday and every Thursday, we look at the commodity market, look at US equity market to see what those markets are doing, right? Beyond just trading EUG, we are extensively looking at other markets, right? Also. All right, that being said, once again, the information for newbies, if you know that you are very new to the industry and you're a total newbie, once again, just go to our YouTube channel, head to our YouTube channel now, type value flow trading and go to the playlist section. You're going to see 2 playlists built and designed for you, right? Forex trading for beginner and Forex beginner course. They are there. Just ensure you go there. Forex trading for beginners and then free Forex trading. Those are the 2 playlists for you. We have 8 videos on the first one and 7 videos on the second one, which is more enough for you to get started and then knowing everything you need to know about the market. Thank you once again. We'll meet again by 2 p.m. for the New York Market Color. Until next time, cheers and God bless.